If you have just incorporated your business in Canada, your next 5 days decide whether your first year end takes 3 hours or 3 weeks. Today, we'll set you up for the 3 hour version. Welcome to Canada's Small Business Money Guide, practical money tips for founders and newcomers in Canada.
Hi, I'm Akshay Bhandari, Chartered Accountant and Commerce graduate. I have spent more than 10 years helping founders and finance teams with accounting, taxation, lending, and growth finance. I now lead Gallant and Tool Inc., where we build strategic financial solutions for Canadian and global startups.
And I am Preeti Parmar, your host. In the next 13 minutes, you'll learn three essentials. Pick a smart fiscal year end, build clean books from day one, pay yourself the right way without guesswork. The checklist link is in the description. Stay to the end. So, Akshay, a lot of new founders assume they should just go with December 31st as their year end. Is that actually the best move?
You can go ahead with that, but the smarter move is to match the year end to your business cycle. If your crunch time is, suppose, January to March, a March 31st year end gives you breathing room to close the books calmly. Pick once, write it in your minute book and accounting software, and avoid changing unless there is a strong reason, like aligning with an investor group or a parent company.
Sure. So it sounds like choosing your year end is less about tradition and more about your team's actual flow work. Choose year end for capacity, not habit. Record it in a minute book plus software. Avoid changes unless strategically necessary.
Think of your accounting as three rails. Rail number one, bank feeds plus monthly reconciliations. Turn on bank and card feeds. Then at month end, reconcile every account to the statement balance, which is bank feed is proportional to the reconciliation. Feed is import, reconciliation is the proof. Rail number two, real time receipt capture. Use a phone app to snap each receipt and save it to a cloud folder. You can name a file like, for example, vendor slash year date slash amount. So searches take 10 seconds. Rail number three, a chart of accounts that fits startups. Set clear buckets: revenue, COGS, R&D, marketing, payroll, owner pay, and separate HST collected and obviously HST ITCs. That separation makes filings and credits painless.
Sure. So, can you paint us a quick picture? What's the difference between a founder who keeps up monthly versus one who waits until tax time?
Sure. So founder A reconciles monthly, year end equal to 3 hours and no missed expenses. Founder B, on the other hand, waits 12 months. Year end, it takes 3 weeks plus around $5,000 of lost write offs because receipts are no more there or they are gone.
So, even with the same revenue, the habits you build can make or break your year end, right?
Definitely. So do these five things this week. Number one, pick your fiscal year end and document it. Number two, enable bank feeds and schedule a monthly close on your calendar. Same day every month, like every first Thursday of the month. Install a receipt app and create a cloud folder named whatever is the easiest name you can give. Number four, open an HST sub account at your bank. Move HST collected from sales weekly so you never spend it by accident because that you have to pay to the CRA. And lastly, number five, create a tax buffer savings sub account equal to 1 month of expected corporate tax. It's your emergency brake.
So, Akshay, let's talk about some common myth that people usually have. Um, what if a startup has no revenue yet? Do they still need to care about accounting?
The fact is that, Preeti, you still have expenses, HST decisions, and records. Clean books now save fees later.
Okay. So, if my bank feed is connected, my books are good to go. True or false?
Not until every line matches an invoice, bill, or receipt, and your ending statement balance agrees.
I see. So, a lot of founders delay thinking about how do they pay themselves. Like, how risky is that?
Leave it too late, and you may miss CPP contributions or RRSP room you wanted.
So, Akshay, do you have a go to rule of thumb for founders trying to strike the right balance?
I can think one. Suppose early stage startup, there is a tight cash, a modest salary builds CPP record and creates RRSP room, profitable with runway. A blend often wins, salary for benefits loans, eligible dividends to use low corporate rates on retained earnings, revisit quarterly, don't set and forget.
How should a founder decide what's right for them?
If your monthly burn is unstable, keep salary modest and predictable. Top up with dividends when profit is clear.
So this has been super insightful so far. Akshay, thank you so very much. And before we wrap up, I want to do a quick lightning round. So great, Akshay. This is perfect. This has been super insightful so far. Akshay, thank you so very much. Well, that's great. This has been super insightful so far. Akshay, thank you so very much. Before we wrap up, I want to do a quick lightning round. These are some of the most common questions we get from our new founders, and I know you have got clear answers ready to go. Let's keep it fast and practical. Are you ready?
Let's do it, Preeti.
Great. So, my first question for you is hiring a bookkeeper something you should do from day one or only once things get busy?
If your monthly close takes more than 4 hours or you skip months, yes.
Okay, my next question is if someone starts with dividends, can they switch to a salary later and what do they need to watch for?
Yes, absolutely. Just plan the timing and source deductions. We model it before year end.
When does HST registration actually become mandatory and what triggers it?
Track taxable sales. Once you exceed the small supplier threshold over 4 consecutive quarters, register promptly and start charging HST on invoices.
Well, Akshay, could you also give us some tips and tools of the week?
Absolutely. Create a recurring month end close checklist. It should include reconcile bank and cards, review unpaid invoices or bills, move HST collected to the sub account, export a PDF package which include trial balance, account receivable, account payable aging, bank reco, store it in some kind of format which is understandable. 10 minutes monthly saves 10 days at year end. Quick disclaimer, guys, this is journal education. It is just meant to aware all the new founders in Canada. It's not a personal tax advice. In case you need any customized advice on your personal taxes and corporate taxes, feel free to page me. My email ID is abhandari@galto.com.
Thank you so much, Akshay, for the lovely information you just gave. So that's it for this episode of Canada Small Business Money Guide. Next week, we are diving into personal taxes for newcomer founders, what to file, what to keep, and how to claim credits you might not even know exist. If you found today's episode helpful, hit that subscribe button, follow us for more tips, and share it with someone who has just launched their business in Canada. See you next week.